Now, getting back to markets, and both the local and broader Asia region are under pressure. And Peter McGuire from XM joins me now. Peter, good afternoon. Thank you for joining us.
Oh, lovely to see you, Danielle.
Yeah, so it's a big week. We've got lots of central banks meeting, and I know we have a chart in terms of the market and Fed rate projections. Looks like they're doing a bit of convergence. We might pull that up and you can chat to us about it.
Interested to see that one as far as you punch that chart up there.
There we go.
We're looking. I'll tell you what. I just had a quick read. Economists expect Fed to defy investors with more interest rate rises. That was in the FT. That was a survey. So we're conscious as far as the big picture. Are we going to see a pullback as far as 100 basis points by the end of 24? Is it going to be a slower pace of growth with, do we see any further rate rises? This is where we're sitting. So we've got a couple of big meetings, as you mentioned, this week, and certainly the Fed. We're not expecting any surprises. But probably one of the wild cards is, and I'm just looking at some notes here, crude oil is up the best part of 23 cents for the last 100 days. So it's up about $23 in that window of time. And that's not a good sign for inflation. And that could be a little bit of a sticky point as far as these, Fed members and very much the other central bankers.
Absolutely. It was an interesting article, that one in the FT. It caught my eye as well, Peter. But let's move on to, there we go, for UK wage growth. Now, that has been a pretty nasty mover and shaker for the Bank of England to try and tackle. So hopefully we can pull up that chart and we can have a look and see that, yes, there we go. UK wage growth has been going completely in the wrong direction.
Well, it's in the wrong direction, but unfortunately, as from a central bank perspective, possibly, but for the man and woman on the street, they're just not matching inflation. And it's there's a point in time, and it's now crossed over, Danielle, which is from a spending power perspective, it's a tough situation globally when you listen to central bankers and what they're trying to create, and the herders on Main Street. If you're not getting wage rises, it'd be crippling for any family. So in a lot of ways, thank you that we've actually seen some growth there in the UK. I'm not sure how that positions itself moving forward over the next couple of months, but there could be further rate rises as far as the UK is concerned.
Absolutely. But if we actually look at Switzerland, and dare I say, I have to pronounce myself at this stage, I'm half Swiss, not that I've ever lived there, but they seem to be experiencing a downward move in inflation.
Yeah, which has been quite a surprise, but it's a big pullback when you're looking at that chart there. It's been an incredible currency to look at from a volatility aspect. One of the two, the best performing for the year so far, that and the Great British Pound. So I wouldn't be surprised if they sit on their hands, the old Swiss. We'll see later this week, and I'm sure that you'll probably see continued volatility across the franc. So for all the day traders out there, it's something they should be focused on and keep an eye, one eye certainly on the Swiss franc over the next couple of months.
And let's just have also a focus on what's going on in the crypto world and Bitcoin, because I've sort of taken my eye off this one a bit, Peter. We've had a bit of a retracement here, haven't we?
Yeah, we sure have, from that 31,000 sort of level, Danielle. So it's pulled back to the 25s. It's sitting there at 26,668. That's the current price. So it's on a bit more of an uptick, and there's no doubt it's been incredibly volatile. You saw that big washout, and there's a chance that you could punch higher from here. So again, waiting to see what happens as far as US dollar, what happens as far as rate policy, and the overall theme globally, and the attraction of that market is very, very strong for, again, crypto traders. 24 hours a day, 7 days a week, the market never sleeps.
Indeed, keeps them busy if nothing else. The Australian dollar, it's hard to tell whether it's been crushed because of, US dollar strength, China weakness. But do you think around this sort of 64-cent level against the US dollar, we're starting to see a bit of stability, Peter?
Well, yes. I mean, you're down to that 63.60, 63.70, and it's bounced from there, Danielle. It's, mid 64s. And that US dollar's had a big lift to the upside. I've just made a note there, about 105.25, that US dollar index. And again, waiting to see what happens this week as far as that, all the data coming out from the central banks. Most of the currencies have been sold off against and certainly the yen and the euro against the dollar. So our dollar also languishing, and the China situation. So I think it's very much range bound, and there's we've got to see a breakout until we get some conviction, and then we'll be able to follow a trend.
Absolutely. And we just lost that chart that we had up there. we missed
Can't remember it because it changes daily.
We missed the currency ones and went straight to the daily performances. So we might just get this one up again in a second, because it's really interesting to talk us through again that crude oil is still, out there at the top, isn't it, in terms of the daily strength?
Yeah, exactly. And a big attraction to the retail traders globally, all the marketplaces that I talk to, and I'm on chat rooms and all that sort of stuff, and hedge funds, they're very bullish at the moment. I think a lot of conviction that it will hit 100 in September, and it's not far shy because it's currently sitting in the best part about 94.5 for Brent. So it could get a giddy up this week, and we've got Friday week is the end of the month. And it just seems to have a lot of attraction to traders. The other point of that, Danielle, we've got over 10 million clients globally, and it's very, very, I think, a sought after commodity to trade anywhere in the world because of the attraction, and again, because of the volatility that presents itself in that market.
Yeah, absolutely. It's interesting that gold's starting to perk up a bit too, just as a casual observation. I mean, I know it's not doing anything dramatic, but it has been a little bit stronger. Just last one, sterling against the Japanese yen. When this chart comes up, can you give us some idea of what that's indicating, Peter?
Well, you've had a stronger Great British pound, weaker yen, and that seems to be not a bad market to trade because it's had that big uplift. It's a bit range bound at the moment, as it's demonstrating in that chart. But you've seen the movements that it's created over the last couple of months. And I think that we might see another, depending upon intervention and depending upon Bank of England, if they see a further rate rise there. But you've got to say, Danielle, that FX volatility, while we mentioned that as far as the Swiss franc, the Great British pound is the two of the top trading currencies this year have been pound and franc. And they're very attractive as far as cross rates as well for traders.